Hi, and welcome to Movements on the Blockchain. Join me and guests to discuss all the latest happenings in crypto, blockchain, tokens, and everything else that's happening in the space. Thanks very much. Enjoy the show. Hi, and welcome to Movements on the Blockchain. My name's Alastair Caithness. We are in our 93rd show, and today we've got a special guest all the way from the UK, sitting second in the league, Anthony Fernandez from ICONOMI. How are you, Anthony?
Doing very well, Alastair. Thank you very much for having me on the show. Next week we could be champions, so still got my fingers crossed. You never know.
Yeah, for all your Americans out there, that's Patrick Vieira, who was potentially one of their best players of all time. So is that a signed shirt you've got?
It is, yeah. Lucky enough to have a signed shirt. It was actually a birthday present a couple of years ago, so it hangs very proudly just behind me. So.
Okay, perfect. So just to kick the things off then, Anthony, can you just give a bit of a background about yourself and your company?
Yeah, sure. Good place to start. So I guess I've been working in the financial markets now for almost a decade. Started in traditional wealth management, but over the past 6 years, I've been working directly in the digital asset market. So my background is roughly 4 or 5 years working in a Bitcoin mining industry, but moved across to ICONOMI, where I now work in digital asset portfolio management. So we're essentially a platform where we host a range of digital asset portfolios and where investors go to access those portfolios as well. So if an investor doesn't have the skill set, knowledge, or know how to kind of understand the digital asset market and constructing a portfolio, we're a place where they can go to get some hands-on experience.
Yeah, that's super interesting. So to start with, just for people to understand, because obviously, most people who watch this podcast own a little bit of Bitcoin, a little bit of Ethereum, maybe Solana, something like that. So, but if they're going on to say a platform like ICONOMI, where it's a lot more sort of, I wouldn't say the word complex because it makes it easier for them, but how does a portfolio work and what do they buy into?
So there's essentially two ways an investor can use our platform. Number one, they can access some digital asset portfolios that are pre-constructed and run by portfolio managers. So it could be a range of index portfolios that have a predetermined asset allocation. So for example, the largest portfolio on our platform is a blockchain index. It's weighted 40% towards Bitcoin, 30% to Ethereum, roughly 5% to Solana, 5% to BNB, and then the remaining 20% is the top 25 altcoins in the market, and they all have a slightly different weighting. And that essentially rebalances on the 15th of every single month to bring everything back in line with the correct asset allocation. So it's predetermined. It's very easy. It's the most popular portfolio on our platform. The investors know what they're getting. And it's actually outperformed just holding Bitcoin because of the allocation to the altcoins in the market. It's a great portfolio to hold during a bull market phase, not necessarily during a bear market phase, because still the portfolio is going to decline along with the market. Outside of an index portfolio, we also have some quant type systems and some discretionarily managed portfolios. And if you're going into the discretionarily managed type strategies, they're slightly more higher risk, but generally the portfolio manager is looking at maybe 10 or under assets, trying to find that next asset that's going to have that high return. But of course, it comes with a lot more risk alongside that as well. So the investor can choose between multiple portfolios. They can also construct their own portfolio using our portfolio management dashboard. And we have a range of assets to choose from, generally the top 150 tokens in the market. But we're always looking to bring on board new tokens that are performing well and have a strong track record in the market as well.
So you think of like a portfolio. So I was looking, I saw the blockchain index. So there was another one, Alpha Digital.
Yeah.
So that, that was the two that I looked at when I was just before you came online doing some research. Can you just explain a little bit about the difference between both, and then why would a investor choose one over the other?
So Alpha Digital is a discretionarily managed portfolio. So there's actually a team behind that particular portfolio who are making investment decisions based on their own research. So it would be classed as a higher risk investment because they're essentially stock picking in the cryptocurrency market, trying to generate return above what Bitcoin would do. So there's a discretionary portfolio manager who is making investment decisions. And when you use that portfolio, those investment decisions occur on your account at the same time. If we then compare that to the blockchain index, it's an index type strategy. So you know what you're getting. You know the portfolio construction. You know it's going to rebalance on the 15th of every single month. It has a system. It has a set weighting, and it sticks to that weighting, whether it's a bull market or a bear market. Whereas Alpha Digital, the investments inside that portfolio could change day to day or week to week. It might be completely different next month compared to what it is today. So it's more discretionarily managed, whereas the index is predetermined and it sticks to that allocation.
So for people to understand that, so, if you invest into, say, the blockchain index or the Alpha Digital index, and then a bear market happens or Bitcoin starts to crash, it's fluctuating quite a bit, and then I want to sell my Bitcoin or I want to sell my interest in the blockchain index, how can you guarantee that you're going to get the payout? Because who's holding the funds for that?
That's a good question, actually. And it brings me on to how we actually structure the portfolios. So with what we do at ICONOMI, we're not a fund. We don't market ourselves like a fund. When you think of a fund, it's a pooled investment scheme. There could be a vested period. There might be a sell down period to get your liquidity back out of that particular fund. With what we do, your assets, so Alastair, if you invested some money today in the blockchain index, your assets stay in your account at all times. Essentially, what we do is we mirror your account to the portfolio manager. So it's more of a mirror investing model. So whilst your account is mirroring the portfolio, the same investments occur in your account at all times. But what that also means is you have instant access to your liquidity to sell down and withdraw within minutes if you wanted to. So rather than a fund model where there could be a vested period, there's instant access to your liquidity at all times. It stays in your account, in your name. It simply mirrors the portfolio manager.
So when it comes to sell, which exchanges do you operate on?
Multiple. So, third-party exchange risk is the number one concern amongst investors across the digital asset market, from my understanding. Obviously, with what happened with FTX. So we actually use roughly 14 or 15 different exchanges, and we have an algorithm which knows which exchange to go to get the best price for our clients. So how our algorithm works, we use like iceberg orders. So when an order is executed, we execute across multiple venues to get you the best price for your trade, essentially.
Okay. So if you think of, now you think of, so how does it calculate the sort of weekly volume through what you do compared to sort of daily volumes in terms of what the exchanges are reporting?
Can you rephrase that question a bit more? Sorry.
So you're looking at, on your website, it said like the weekly volume that you do is around about 11 million euros.
Yes, so far. Yeah, this week. Yeah, so that's all of the volume amongst a combination of all of the portfolios on the platform. So we have roughly maybe 120 million pounds on the platform now across the various portfolios, and across those portfolios, they rebalance at different stages based on their strategy. So that's a combination of all those portfolios this week is roughly 11 million at the moment.
Okay, so. And then if you start looking at some of the exchange volumes, now I quite question the numbers that the exchanges actually report, because you're sitting looking at, even Coinbase, I was looking at before it came on, says they do like 2.8 billion a day. Do you think that's actually correct? Or how do they inflate these figures, especially when you start coming down to the tier 2 exchanges, because they can be reporting 300 million a day, and you never even heard of them. I think one of the exchanges that I was actually surprised at the reporting was the new exchange 2bit said that they were doing over 1 billion a day. It's like, how can they report these high figures? Because it just doesn't make sense. Because if Bitcoin does 1.2 billion a day. Is that how much Bitcoin's trading on a daily basis? Around about that?
Well, I would be that sounds reasonable to me, to be honest, because we take a look at the daily inflows to the Bitcoin spot ETFs. They're accumulating roughly 2,600 Bitcoin per day. That's the daily average that the Bitcoin ETFs are accumulating. So I think that's off the top of my head around 160 million. That could be incorrect, actually. I need to double check those figures. But yeah, they're accumulating a considerable amount, and that's just the buy side. And then you have traders in between. You have futures, derivatives as well. You have these high frequency algorithms. You have market maker strategies as well. So for me, especially with Coinbase, that number seems reasonable. For these smaller type platforms, yeah, I'm not too sure if I can comment on those ones. But Coinbase in particular, that seems reasonable given the market conditions at the moment.
Okay, so because there is so many exchanges now, you know, I think there's like maybe 150 exchanges. So how do you see these exchanges? Is the market going to solidify, or what's going to happen going forward?
I think it really depends on the regulations in different areas of the market. So, you know, regulatory conditions are evolving in the EU, the UK, and the US. Potentially becoming harder to get regulatory permissions. So, you know, there's certain places exchanges go to, especially in Europe. You know, you take a look at Europe, exchanges go to places like Lithuania or, you know, Eastern Europe, because it's easier to get that kind of regulatory permissions. I think once, you know, MiCA comes in, we're probably going to see a bit of a crackdown in the next year or so. But I expect, you know, at the moment, especially, the retail volume isn't there in the market. It's the volume is coming from institutional liquidity. So I think if there's not as much retail coming into the market, a lot of these smaller exchanges are naturally going to die off over time because the volume simply isn't there. The bulk of the volume is coming from the institutional side of the market at the moment.
Yeah, because I'm an advisor for a DAO token out from India, and it was it's been interesting because I didn't really know much about the tier 2 market space till I started working with Arpin and a young team of guys. They run an AI software company, and then they're all smart. They're all like super nerds, if they could put it that way. But they got me in, and they were doing a sort of energy-based token. So my background was sort of energy blockchain tokenization, and they wanted to do one in sustainability. But since you start going into it, it's just, it really is like Pandora's box when you start going into this altcoin market space. I had no idea how many coins are getting created on a daily basis, and then also to try and do any sort of differentiation, you know. So it's because, you know, Coin Perpica, you know, they basically track around about 10,000.
It's crazy, yeah. The number of tokens in the market is crazy. You know, a lot of these kind of projects decide to go through that kind of ICO phase to raise capital. They've been doing, you know, like an airdrop to get that kind of FOMO and that community coming on board to use the token. And a lot of them, it's kind of the same playbook over and over again. But a lot of them, they don't have that kind of long-term roadmap or the longevity because of the way the tokens are structured. So there is definitely a lot of junk out there. For myself, you know, as I come from the Bitcoin mining industry, I am a bit of a Bitcoin maxi, but I understand that there's definitely opportunity for return on investment outside of Bitcoin as well. You know, especially like Solana has been my #1 favorite last year. So I don't dig too down into the weeds. In my experience, I tend to stay with the major tokens. I would say I'm more of a mainstream investor in the digital asset space. But yeah, there's definitely a lot of junk out there in the market at the moment.
You know, these guys have got sort of relationships with Binance because they've been speaking to, you know, they went to one of the big Binance events, and they spoke about, you know, you really need to be trading, you know, for a year, build up to about 5,000 token holders to even get onto their exchange and sort of start ticking all their boxes. If you're buying any sort of token in Binance or Coinbase, probably been in the market for at least 12 months, if not minimum longer, to even get any sort of traction to get onto these sort of type of exchanges. You pick these altcoins. What's the strategy for you guys?
Yeah, that's I'm glad you came onto that actually. So, we do our best to protect our investors in terms of the tokens that are on the platform. It is a request basis. So if there's a token not on the platform, we will do our best to list it. But like you said, in terms of listing on Binance, we also have a strict listing policy. So the token must be listed on at least 3 major exchanges, Binance being one of them, Coinbase, potentially KuCoin. There needs to be a minimum 24-hour volume, and there needs to be a stable market cap over the lifetime of the coin, or over the past sort of 6 months at least. If it ticks those kind of 3 boxes, it then gets passed to our compliance team to do like due diligence checks on the token and the team. If it gets listed on the platform, it doesn't necessarily mean it's a good investment, but it has ticked the boxes to get listed. So we do our best to kind of filter out these tokens that are, pump and dump schemes, or these quick wins in the market where there's no longevity. So yeah, we do our best to protect our investors, but of course, not all tokens that are listed are good investments.
I don't really know anything about tier 2 exchanges until I started working with Artbin and his team, because you don't even know these exchanges, because people aren't even aware of them. If you think of the US, it's like crypto.com, Coinbase, Kraken. I would say the 3 big ones, Binance US, but over here now in the US, people are sort of staying away from Binance just because it's that political type thing. That's the Chinese exchange, so it's the thought process. But even though it's the biggest exchange in terms of market cap, but when you go to something like in Asia and India, it's like Binance is the number one thing. They don't want to make ERC20 tokens. They just want to make BEP20 tokens. And it's obviously a different mindset, but compared to the US doing that thing. But how do you see Binance tokens, Ethereum tokens, that was just sort of terminology I was using there just now. What's the difference out there? And does that affect what lists onto your platform?
Not necessarily, no. I mean, when ICONOMI started, we actually was one of the top 10 ICOs in the world. So we actually had an initial coin offering as well on the ER20 blockchain as well. So over time we've phased that out, and we've moved on from there now. So we don't have a token anymore. But that's actually how ICONOMI started. In terms of the differences, we're not kind of strict in terms it has to be on a certain blockchain. We're open to all types of tokens, whether it's on Binance, whether it's on Ethereum, whether it's a meme coin on Solana, as long as it ticks the kind of the boxes for us to pass the risk checks, then we're open to listing the token as well. It's more of a request basis. If an investor says, have a look at this token, it could be on the Binance blockchain. It's got good volume, it's listed on multiple exchanges, then of course we'll pass it through because it could be a good investment opportunity for our strategies. And I think every cycle is different. There's a different theme, there's a different blockchain that performs well. And a lot of the tokens from the last cycle do become stale, and they don't tend to perform well every single cycle. So we do have to kind of refresh the tokens that are on the platform to make sure there is still opportunity for our portfolios to perform well.
So you said it becomes stale. So what do you mean when a token becomes stale? What happens?
I guess you would say that, it could lose its drive. The community might fade. They might move on to different tokens or newer projects. If you think about how a project survives, it needs liquidity coming into the market. It needs capital coming into that particular project for the price to go up. And if the community kind of aspect is fading away and they move on to a different project or a different token, then liquidity naturally drifts off into a different direction as well. So when I say it becomes stale, in terms of the price action, might just be moving sideways. XRP has gone nowhere for a number of years. Really, it's moved sideways. It has a good following, but it might not be building on that. And just the same liquidity is sat there. There's no fresh capital potentially going into that particular token. Now, I know there's a lot of XRP community members out there, but just using it as an example, the price action has gone sideways for a number of years. So that, a community aspect is what drives adoption and growth and price action, in my opinion as well.
And then also, I think it's what the use case of the token does as well.
Exactly right. Use case, what problems is it solving? The adoption rate, is there is there advances in the tech side of things? Are they making progress on the platform or the project? So yeah, definitely use case and how it solves real world problems is obviously key to growing a community in the space.
So you think with the blockchain and digitization and that, do you think it's just, are we just at the very start of the cycle, or where do you see it in the long run of what's happening?
That's a very interesting question. I think this is the first cycle where Bitcoin traded at record highs before a halving event. So it's going to be a different cycle to previous ones. I believe, it has been accelerated because of the Bitcoin spot ETFs. They've accumulated 13, 14 billion of inflows. So all the liquidity has gone into Bitcoin. It hasn't filtered out and watered down to the rest of the ecosystem yet. Barcelona last year, which was up 1,000%, it received 140 million of institutional liquidity last year, which was the second highest behind Bitcoin. We've seen the rest of the market not really receive or gain much from those inflows into Bitcoin. So in terms of where I see the market going, I personally don't believe we're at the top of the cycle yet. We've just had some news coming in that the first US pension fund has purchased some Bitcoin spot ETFs. So I think that could start a domino effect across the country. We've just had news that JP Morgan has purchased some Bitcoin spot ETFs, and the JP Morgan CEO has been, pretty against Bitcoin online and in the news media over the past couple of years. So I think we're kind of just at the start, but I think we're at a mid-cycle adjustment. So, we need global liquidity to start picking up. I think investors are potentially nervous at these levels because the Federal Reserve is keeping interest rates elevated now, potentially into year end. But we have had that kind of uptick this morning because US CPI data came in lower than expected yesterday, which is now indicating that the Fed may start cutting rates between September and November this year. So Bitcoin thrives in an environment of lower rates and higher global liquidity. And the Fed announced last month that they're going to start reducing the QT, the quantitative tightening program, which means they're not going to reduce their balance sheet as aggressively. So, towards the end of 24, I think we're going to come towards the end of the tightening cycle of central banks, potentially tapering off of interest rates. And that's why we're seeing, the stock market, the S&P, the NASDAQ trading at record highs at the moment, off the back of the fact that we're going to have easier financial market conditions towards the end of this year. So, I think we're going to see a mid-cycle adjustment, or we're going through one now. But for me, I don't think we're at the top of the cycle just yet.
And so, you spoke about Bitcoin ETFs a couple of times, just to give the viewers understanding of, obviously BlackRock opened their Bitcoin ETF, but who else is going to open Bitcoin ETFs, and how much more institutional money is going to go into it?
So in, the Bitcoin spot ETF market, the fees, it's a race to zero. So unless you have a user base, you have investors ready to go and to invest capital, I personally don't see it being a viable business model for someone to open a Bitcoin spot ETF that doesn't have capital ready to deploy into that market. So I don't see it being a case of, 10 more ETFs coming out. I think it's more of a case of new liquidity coming into the market into those particular ETFs. We've now had the ETFs go live in Hong Kong. We have the UK potentially the second half of this year with similar type products. So I think it's more about fresh liquidity going into the existing products and the existing ecosystem. If you take a look at Standard and Chartered, they forecasted, 100 billion to flow into these ETFs over the next 2 years. And they have a price target of 150,000 by the end of 2025. And if you look at the previous cycles, a minute ago you asked me about where we are in the cycle. Bitcoin generally doesn't find a market top until 1.5 years after a halving event. So that would indicate potentially mid to end 2025 for the next bull market cycle top. So, based on previous analysis, previous bull markets, we're looking for mid to end 2025 for this next bull market cycle top.
And how high do you think it goes? Michael Saylor thinks it will go to $1 million, considering how all the Bitcoin he owns. But realistically, for investors out there or investors looking to use your platform, You know, what do you think the next 6-12 month outlook is?
You know, I'd be conservative. If we take the data halving to halving, okay, so the last halving was 7.5 times higher. The price of Bitcoin was 7.5 times higher than 4 years previous. So, but the amount it's growing every 4 years obviously is coming down. It's not as aggressive. So, you know, I would say the 150 to 200,000 range is not too aggressive, but realistic from today's price in a year and a half. Bitcoin has an annualized return of roughly 150% a year. So, you know, that's potentially in line with a gain from today. If we're at 60,000 today, roughly 150,000, roughly 150% gain would take that up to, you know, 150 around that area. So being conservative, I would potentially say 150 to 200,000 would be my ballpark figure for the next cycle top. But of course, 10 years from now, 20 years from now, a lot higher.
So when they're coming to, so do you think there's going to be the same fluctuation going forward if there's more and more institutional money coming into it?
Personally, no, I don't. I think we're going to see a decreased volatility in the long run. I think the halving event is going to have less of an impact over the next couple of decades because the issuance rate is going to be minuscule compared to what it has been previously. So, you know, I think, but it's obviously sentiment driven. You know, if everyone thinks that Bitcoin is going to drop by 80% in the next bear market, of course, all investors are going to be pulling their money out at the top of the market, expecting that drop, which has this kind of self-fulfilling prophecy type of role because everyone's withdrawing, the price of Bitcoin is going to go down. So it could still have a sharp pullback during the bear market phase. But if we look, you know, maybe 10 years from now, I do think volatility is going to subside. And it may not be as aggressive both to the upside and to the downside as well.
So how does that play into the rest of the digital market space then? Say Ethereum and Solana and Cardano and all that.
Yeah, I'll just touch on the volatility again. If you look outside of the West, I think, you know, places like Argentina and Turkey, they view Bitcoin as more of a digital currency because their currencies are, you know, under extreme pressure and collapsing. Here in the West, I think people view Bitcoin as more of a digital asset, as a store of value. So I think for it to become a currency globally, there needs to be less volatility, of course, before it can be adopted in different parts of the world. So, you know, for me, Bitcoin's like a mixture of gold, a tech stock, a currency, and a commodity. So it's kind of a combination of all three at the moment. In terms of the rest of the ecosystem, in terms of gain and return on investment, I think it's going to be determined by the Ethereum spot ETF, which the deadline coming up later this year, and whether that gets approved or rejected. If it's going to get rejected, I think, you know, a lot of these altcoins will probably come under pressure because you're seeing inflows into Ethereum based on the fact that investors are looking to front run the Ethereum spot ETF deadline later this year. If it gets approved, it's going to be a game changer for the rest of the market because you could then have a potential Solana ETF and you know, various other altcoin ETFs, which means institutional liquidity can now flow into these regulated investment vehicles. If they get rejected and it's, you know, a stonewall no, then it's going to kind of prevent a lot of this institutional liquidity flowing into that area of the market outside of Bitcoin. So I think a lot hangs in the balance later this year based on the Ethereum spot ETF deadlines.
And then how does the gas fees affect that as well? Because especially when you're, say, moving Ethereum around compared to like Binance, you know, because the Binance gas fees are, you know, 10 cents. If you want to mint anything in there, you go to Ethereum, it's like, I actually moved some Ethereum recently and didn't realize it was $35 to move it from an exchange into my MetaMask wallet. You know, it's just like, but then it's stuck, you know? So I always think that's a problem for Ethereum in the long run.
Oh, 100%. Yeah. But that's what you're seeing a lot of, you know, the Ethereum community, or a lot of flows are now moving towards Solana as a cheaper alternative. So, you know, you're going to see, you know, Ethereum will still benefit based on any project that's built on top of the Ethereum network. So there could be a lot of projects that solve the transactional fee side of things, which performs well. and that will still benefit Ethereum because it's built on top of that particular blockchain. But yeah, I think that's why you're seeing a lot of flows head towards the Solana ecosystem at the moment. Like I said, last year it performed over 1,000% in the year. Had the second highest level of inflows at the institutional level behind Bitcoin. So I think Solana is kind of taking a bit of Ethereum's market share because obviously the cheaper fees and the way it's structured at the moment.
Because, you know, the fees for the exchanges can be quite high as well when you're trying to remove your money out of there, you know? So how do you think that's going to change going forward?
Yeah, I mean, it could be another case of a race to zero. So with ICONOMI and what we do, I guess I can only speak from firsthand experience at ICONOMI and what we do. So we don't charge for withdrawals. It's just a blockchain fee that you need to pay. So depending on the blockchain you're using, you'll obviously pay that blockchain fee. So cryptocurrency withdrawals are free to do. That's been a similar case for me on some other exchanges as well. But of course, you know, if you're withdrawing Ethereum and it's a congested network, the fees are going to be extortionate. You know, I was a long time ago minting some NFTs when I was in that market, and the fees were worth more than the NFT at the time. So I didn't go ahead and actually do it. But yeah, in terms of the fee side, from our perspective, withdrawals are free. It's mainly the blockchain fee that you have to pay.
Okay, yeah, and then, you know, you're speaking about NFTs as well. So, because obviously in lockdown we had nothing to do because we're all locked in, and then the NFT market completely blew up during that period, and everyone got really into it. But the technology in terms of hashing information on the blockchain and opening all that piece up to it's amazing. But where do you see the NFT market going? Is it going to make a comeback, or is it going to diversify, or how do you think it's going to go forward?
You know, I think there's definitely a space for NFTs and in the market, but I think you definitely had that kind of overhype of the NFT market. For some of these projects were selling ridiculous artwork for extortionate amount of money, and I think it was more of the hype. And you know, every bull market has a slightly different hype. At the moment, it's the Solana meme coins that are doing extremely well. Maybe that's the next kind of craze that's going to take off this bull market. Or maybe it's AI that's going to take off this bull market. Last month, it was the NFT hype. So it's always a slightly different kind of craze or momentum around a particular product offering. Whether NFTs last long term, I think there's probably specific use cases for individual NFTs that will last long term. But I think a lot of the bulk of the NFTs will naturally die off with a lot of these kind of tokens that have no real utility as well.
Okay, yeah, like Donald Trump's NFTs, they might go up in value. You never know.
Exactly right. Yeah, they might be worth something in a few years if he becomes president again. So
yeah, or doesn't. You know, it doesn't make any difference. Yeah, but you're thinking of like the technology behind NFTs and the blockchain and AI. How is AI affecting the blockchain in your business?
I wouldn't say it's affecting our business yet. It's not taking anyone's job just yet. So touch wood. It's more around the tokens that people are investing into. So we've had a lot of tokens requested onto our platform. We've managed to list around 4 or 5 new AI-backed tokens on the platform at the moment. So I wouldn't say it's affecting my business yet. I think we'll see AI come into effect a lot more on the portfolio management side and coding of different systems, investment strategies. I think it'll come into play there, building out scripts for traders. So yeah, potentially on the portfolio management side, I think AI will take off, but for us directly, it's had no kind of impact just yet.
So, but you see a lot of the sort of services where they do sort of AI, I wouldn't say market making, but it's AI day traders. People are coming in there because if you go to the sort of altcoin tier 2 exchanges, there's no point in you basically investing money in and out if you're going to go against it, because essentially you're just bot trading against these guys, sort of using bots to get the arbitrage and try and make money off it. So when people are doing that type thing, can you explain to people how that actually works?
So essentially, they're looking at small arbitrage opportunities across the market. So for me and you, the price difference on Binance and Coinbase is going to be minuscule. By the time we've purchased those tokens, sold them on a different exchange, our fees are going to be eaten up. Okay, so it's not really worth our while. But if you're trading with, tens of millions or even larger, those kind of 0.001% could be a reasonable gain if you're doing that 10, 20, 30 times a day. So these kind of algorithms are essentially buying and selling different assets based on price differences across various exchanges to make a small gain, but consistently over a period of weeks or months.
And that's really how, Bitcoin and crypto day traders operate.
Yeah, exactly. And, that's why you see these extreme volumes on these exchanges. So it comes back to what we was talking about earlier, where a lot of these small exchanges have ridiculous volumes when they potentially don't have the user base or customer base. And it's potentially because of these like market making strategies, these automated bots that are trading frequently, buying and selling at different price points frequently throughout the day as well. That's how they build up their volume.
Okay, so they sort of do it from there. So, and then how is that going to get regulated, or what's going to happen to these sort of exchanges, you think?
Yeah, that's a good question. Unfortunately, I probably don't have too much insights there. We run a more of a mirror investing model. There's definitely algo traders out there as well. We're not necessarily suited to short-term, high-frequency trading, just because of the way we're structured. So, our platform is more focused on medium to long-term portfolio construction. Rebalancing maybe weekly, monthly. You can rebalance daily, but rebalancing multiple times per day isn't suited on our platform.
But even on the bigger exchanges now, I think you look at some of these services that offer it, they say they run it on Coinbase and Binance and stuff like that. So does these type of arbitrage exchanges or, bot trading or whatever you want to call it happen on the big exchanges as well?
Yeah, you'll be able to code a bot and plug that into various exchanges. With API integration, you can link up your wallets. If you look at Binance, they run API model with sub accounts, so you can actually manage various investors' accounts with API integration. So you can be running bots on there and trading various different products, whether it's futures, spot. But I guess the arbitrage opportunity isn't always there. It's different during different times of the day based on volume on different exchanges. If there's more volume on Binance and less volume elsewhere, there might be a divergence of the price in the spread as well. So that's how they're spotting these opportunities, and that's why they do it on these kind of exchanges.
So how does the Bitcoin ETFs sort of stop that?
What the algorithms, I guess, will cause short-term volatility in the market. So it could be some small moves over a 5-10 minute candle. If you're looking at the Bitcoin spot ETFs, they're actually more of a long-term play based on the daily inflows and outflows into these ETFs. So they're accumulating, on average, 2,600 Bitcoin per day. Bitcoin at the moment has an issuance rate of 450 Bitcoin per day. So they're accumulating, what is that, 6-7 times the amount of Bitcoin that's being produced per day. So essentially what they're doing is they are taking Bitcoin off exchange because it goes into cold storage, and they're reducing the amount of Bitcoin in circulating supply on exchange. So that essentially puts upside pressure on the price of Bitcoin. So these algorithms are resulting in short-term price fluctuations of buying and selling, potentially on the spot or on future products, which causes short-term volatility. But the Bitcoin spot ETFs are making an impact over the longer term because they're actually reducing the amount of Bitcoin that's on exchange and in circulation. The recent low on Bitcoin was at roughly 56,600. On that same day, we had a sharp sell down from these Bitcoin spot ETFs. They sold, maybe 3,000 Bitcoin on that day. And then the next day, there was a sharp increase in the daily inflows into these ETFs. So all the big moves down or up on Bitcoin are coinciding with the inflows and outflows to the Bitcoin spot ETFs.
And that essentially, because if Bitcoin's 50% in the market, just for people to understand out there, how does that affect the rest of the market? Do they just follow suit?
Generally speaking, yes. Bitcoin for me is I guess the king of the market. If it survives and does well, the rest of the market theoretically should thrive. in a bull market phase, generally you can throw a dart and you'll pick a winner in the altcoins. It gets a lot harder during a consolidation phase to find a project that's going to do well. So generally for me to kind of find a token that's going to perform well, I'll go and track institutional liquidity into different tokens. So that's why last year Solana did well, because you're tracking institutional liquidity. So for me, if Bitcoin does well, the rest of the market should perform well. But I guess we haven't had that trickle down effect as we usually get in previous cycles. Especially tokens, Polygon, Matic, BNB, XRP, Dogecoin, they're still way, way below their record highs. Ethereum has caught up to a degree, but I think that's based on the fact that we have this Ethereum spot ETF deadline in the next couple of months. But yes, for me, Bitcoin needs to perform well for the rest of the market to do well.
Because essentially, I understood that a lot of institutional money was afraid to come into the market space like Bitcoin, etc., because of the volatility, and they didn't trust the exchanges. For your investors, what percentage is institutional investment compared to retail investment?
Yeah, you're definitely right, and that's why these ETFs with a custodian is different to holding assets on exchange. They invest into these Bitcoin ETFs. It moves to a custodian off exchange in secure cold storage. So that's why these are really opening the doors for institutional liquidity. And we're just scratching the surface. There's still, in the grand scheme of things, it's been minuscule, the amount of money that's gone into these ETFs compared to the rest of the financial markets. On our platform, we're 8 years old now. Historically, we've been a retail platform, and we will continue to serve the retail market. But over the past year, my role has been working more with, business owners, family offices, high net worth investors, and institutional clients, and helping them provide them with a digital asset solution for their company, whether it's just buying Bitcoin, holding it on their balance sheet, whether it's building a diverse portfolio, or whether it's using and accessing our existing portfolios as well. So we're moving more into the more institutional side of things.
Yeah, that's super interesting. So you're thinking of the UK market space. What's the UK government outlook on the digital market and Bitcoin?
They say they want it to be a crypto hub. They want the UK to be a crypto hub. We have some fresh regulations coming in June around staking, which is banned in the UK at the moment. But I guess there is a divergence between what the government wants and what the banks want in the UK. So we're an FCA-registered company here in the UK for crypto, but still a lot of our clients have issues with high street banks depositing to our company because they're blocking transactions. They're essentially trying to stop liquidity flow into the digital asset market, because I guess it is a threat to the traditional financial markets. So you have the government, saying one thing and trying to be positive around regulations and forward guidance. And then we have the banks, who are essentially the rails to cryptocurrency, doing something different and making it very difficult for investors to access the market.
So in Europe right now, we had Frederic from Cardano on speaking about the Swiss market wanting to be a hub for crypto and digital assets. Where do you see the market spaces in, considering the major financial centers around the world, which place is going to be the leader for this?
I think this cycle is going to be dominated by the tokenization of real world assets. I think that's going to be a major theme over the next 2 or 3 years. And you can see BlackRock is moving forward in that area as well. So I think, the US was very quick with the Bitcoin spot ETFs, considering Europe and the UK. You take a look at a lot of the local countries and economies. They all say they want to be a crypto hub and a digital asset hub, but I personally think a lot of them are probably afraid to take the first step and provide that kind of guidance and regulation that the market needs. It is evolving, but it's very slowly evolving. But it's definitely progressing, but it's a lot slower than what I think the market needs for it to evolve faster. So I think that the US is definitely a good place looking from the outside in, especially considering these Bitcoin spot ETFs. But again, there's still a lot of issues with the SEC going after various players in the market, deeming what assets are a security or not a security. So there's still a lot to be cleared up in a lot of different areas of the world.
I could keep asking you questions all day here.
No, fire away.
Yeah, but you know, if coming back to like your business, where do you see your company in the next 12 to 18 months as well? Then, Anthony.
Yeah, that's an interesting one. So I think we've developed a few other features or products that are going live in the next sort of two months, suited to the more sophisticated area of the market. So we have ICONOMI Wealth coming out, which is specifically for wealth managers and advisors in the digital asset space. And this essentially allows advisors to manage clients' portfolios through our platform. It comes alongside a cold storage solution. It comes alongside execution across 15 exchanges and a portfolio management dashboard and investor management dashboard as well. So that's going to be a big push for us over the next 2 years. I think especially in Europe and various parts of the world, but particularly Europe. The UK is a bit more difficult. If you look at the financial advisor market, an advisor can't advise a client to go into an unregulated investment vehicle. So until there is, the Bitcoin spot ETFs equivalent in the UK, I guess the professional market in the UK is a bit reluctant, or they're not able to go into Bitcoin and digital assets until that side of things is cleared up. So, for us, we're pushing into the wealth management side of digital assets in Europe. And once it's kind of cleared up in the UK, we'll hopefully be pushing further in the UK as well.
And then just to explain to our viewers the benefits of cold storage, you spoke about it there as a product.
Yeah, it essentially removes all third-party exchange risk. So, when you're on exchange, you're exposed to bad players, bad actors, like what happened with FTX. And unfortunately, FTX, although it's a company, there's other companies that are invested in that particular company and hold assets on that particular company. So it's like a domino effect, similar to like a bank run in the US, which can domino across the market. So with cold storage, your assets are off exchange. They're in cold storage. They're on a device, potentially in a safe somewhere, which means it can't be hacked, or an exchange that goes bust, it won't impact your assets that are in cold storage. So, it's like you holding the keys to your crypto in your wallet, in your house, in a safe where no one can access it, but you're outsourcing it to a custodian who has the regulatory permissions to do that.
And there's no risk in doing that.
Yeah, there's always an element of risk. There can still be a bad player in a custodian. There can potentially still be a breach at a custodian as well. But there's a bit more regulations around it in terms of protections for your money. There could be insurances. There could be cover for any stolen or lost assets in a custodian. So there's a little bit more protection in a custodian rather than on exchange, where a hot wallet, so an exchange wallet or like a MetaMask wallet, a hot wallet can be hacked and assets can be stolen fairly, not easily, but it's common. It can happen. In a custodian, in cold storage, it's very, very difficult for that to happen.
Yeah, because there's a lot of these hot wallets coming out there. Well, obviously the Coinbase ones, and then there's MetaMask and things like that. So, but do you see the exchanges diversifying into that market space as well, or?
No, not particularly. I mean, the custody market is another market which is tough from a revenue perspective, because no one wants to pay a lot of money for you to look after their assets, and that's it. So, you're looking for a custodian. Again, the fees are pretty much a race to zero, like the ETFs. So you need large quantities of assets to make it a worthwhile business model. So there is a lot of big players in the custody space. But I don't see a lot of exchanges venturing specifically into that space to compete with them.
So, because we keep thinking of questions. So what about stable coins? Where do you see the stable coin market going? And does your company operate with stable coins?
Yeah, no, we do actually. So there's been recent regulations in the EU around that. So if a stablecoin issuer isn't regulated in the EU, an exchange cannot offer that token to the EU market. So we're actually going through a major change here at ICONOMI around Tether. So we're having to delist Tether, and so are multiple exchanges in the EU at the moment, because it's not an EU regulated company. So for a stablecoin issuer, especially in Europe. They have to be regulated and under the MiCA directive as well.
And then where does the liquidity come for a stable coin, to explain it to the viewers?
That's a tough one. So it's backed 1-to-1 to a dollar or a particular asset in the market. So, for example, Tether will be 1-to-1 to the US dollar, essentially. So there can be a depegging of them ever so slightly, or if something goes wrong with the algorithm. But generally, the token is backed 1-to-1 to the asset that it's tied to and pegged to.
And explain to the viewers the advantage of a company using, say, Tether or USDT compared to just using the US dollar, say, on a $50 million transactional fee.
Potentially a lot cheaper, potentially a lot quicker, and a lot more transparent. Okay, so if you're transferring $15 million to via the traditional banking method, you're going through the bank. It's a bank-to-bank transfer and then into another account. So there could be multiple players that are handling that transaction. There could be multiple fees alongside that transaction, and it could take, hours, or depending on the size of the transaction, it could take a couple of days. So there could be a lengthy time to actually transfer those assets. Now, I'm not saying Tether is a better solution, but if you did use Tether, it's near instant and potentially will cost a fraction of the price to do so. So that's why stablecoins have become so big in the market. Rather than using fiat to crypto, it's now stablecoin to crypto sort of transaction. But what I will say is we're having a lot of conversations now with money market funds. So these could be, a pound or a euro or a US dollar money market fund that provides interest. It could be like a 3, 4, 5% interest. And what they're essentially doing is they're now tokenizing that money market fund. And I think this is going to be a theme over the next year or so. I think it's going to pick up a bit of traction, where we're going to see a lot of tokenizations of different money market funds. So rather than going from Bitcoin to USDT, you might go from Bitcoin to a money market token, which is going to generate you some interest, rather than just holding US Tether, which there's no interest involved in that. So I think we're going to see more tokenization of money market funds.
And that might help the adoption with the whole market space as well, because I think, tokenization we were involved with here with tokenizing oil and gas assets. That was my background when we're doing it. And then we tokenized the first well interests in America. And unfortunately, no one else has done it apart from us, but so far. But but we feel that the market space is coming. But when we first were doing tokenization back 2018, 2019, everyone was just looking at real world assets. But it seems to be, since the tokenization of funds, now you've got the big sort of financial players coming in, and maybe the rest of the market might follow it.
Yeah, no, I agree. Especially if you think about, a bear market phase, where does an investor put their money during a bear market in the cryptocurrency market? Generally, liquidity leaves the market, goes back to fiat, because there's nowhere to park your capital, because generally the whole market is going down. There might be a couple of anomalies where they perform well in a bear market, but generally the market dips. If there is a yield generating stable coin in the market, like a money market fund, it will encourage investors to stay inside the crypto ecosystem, inside these tokenized money market funds. And I think we're also going to see other funds become tokenized and potentially be offered on various exchanges as well. So we're going to definitely see tokenization happen of real world assets, and potentially those assets being held on various exchanges as well. But I guess that depends on regulations.
And that's just going to grow the entire ecosystem.
100%. Yeah, I think that's going to happen naturally over time. BlackRock are spearheading the tokenization of real world assets at the moment.
Perfect. So, that's a great way to end the podcast. So how can we find out more information about your company and yourself then, Anthony?
Yeah, great way to end up. So you can search for us on LinkedIn, number one. So search for ICONOMI. We run a free monthly newsletter on ICONOMI. We take a look at the technicals, fundamentals, tokenomics of different projects, the macro side, what's moving the market. So there's a free newsletter to subscribe to on LinkedIn. So search for ICONOMI. That's ICONOMI. And feel free to follow me on LinkedIn as well.
Perfect. And I'd like to wish you luck next week, but this weekend with Arsenal out there, it's going to be squeaky bum times, as Alex Ferguson used to say.
That's it. Hopefully next time we catch up, we'll have some good news to share anyway.
No, that's been brilliant today, Anthony. An excellent guest, and I'd love to get you back on the show in the future.
Appreciate it. Thanks for your time.
Okay. Thanks to everyone out there. You've been watching Boom It's on the Blockchain. My name's Alastair Caithness. Have a nice day.